SoFi investors, welcome back to the channel. My name is Jason. In today's episode, we're going to break down a huge question for SoFi stock, and that is whether or not the company is going to be taken over by another company, and is SoFi a potential acquisition target? I'm going to go over 4 companies that could potentially buy SoFi and whether or not I think this is actually going to happen. Make sure you hit that like button and subscribe to the channel for all your SoFi updates. Let's get into the video. All right, SoFi investors, really weird day today. The stock got crushed early on, touching down to 1650. Then it shot up 6% intraday to over 1750. It's been a weird, wild ride for SoFi this year. I mean, year to date, we're still getting obliterated. There's been, ups and downs, roller coaster ride pretty much all year long. Since the initial sell-off, we bottomed out at 15.23. We shot up to almost $20 per share, only to sell off again, ride it up again. But it does look like we're making higher lows if we take a look at the recent chart. So we'll see how that shakes out as we get closer and closer to earnings, which are only a few weeks away. I mean, even over the last 6 months, still not looking good. Over the last month, not great. Pretty much just trading flat. The stock's been not good. Straight up since November of last year, when it touched over $30 per share. That was $32 per share, and since then it's been obliterated, down over 50%. It's been a shit show for SoFi investors over the last 8 or so months. But we'll see what happens once earnings gets reported. Is it going to sell off? That remains to be seen. But if we take a look at the company overall, I do think that the question we're asking today, is this a potential acquisition? It would behoove companies to do their due diligence on SoFi, especially trading at such a low valuation right now. If we take a look, it was over $31 billion market cap, only $22 billion today. So a considerable discount. The price to earnings, forward PE is at 28, the cheapest it's been in a very, very long time. Same thing goes with the price to earnings growth. So if you would buy this company now, would be the time to do it. Price to book looking pretty juicy to me. It was at 4.64 back in September of 2025 of last year. Now it's at 2. That's cut in half. These numbers are looking considerably better for SoFi. And if we take a look at the overall company, $3.5 billion in cash, $1.92 billion in debt. So those numbers, cash to debt, look pretty good to me when we're looking at acquiring a company the size of SoFi. So for me, the 4 companies that could potentially buy SoFi right now: PayPal, Bank of America, JP Morgan Chase, and Mastercard. So do they have the free cash flow to do it? If you take a look at this chart right here, here's the free cash flow numbers over the last 4 years. Bank of America kind of all over the place. From losing money to making money to losing money to making money. Not great, for sure. A more consistent free cash flow is PayPal. Over $4 billion each of the last 4 years. That's great. Free cash flow for JP Morgan Chase, not looking good. And that is an understatement, especially the last 2 years. It went from plus $107 billion to plus $12 billion to negative $42 billion to negative $147 billion. Yikes. And then Mastercard. These numbers look the most solid to me free cash flow wise, especially when you look at a year of free cash flow of $16 billion and the market cap for SoFi right now, only $22 billion. So acquiring a company like this would not put a ton of stress on the overall business model for Mastercard. SoFi Tech has quietly built the profile of an ideal fintech takeover target. Almost 15 million members, a national bank charter, $40 billion in member deposits, funding over 90% of liabilities, and the Galileo tech platform servicing approximately 133 million global accounts. Share price $18, market cap under $23 billion. Here's the catch. The deal is to buy a regulated bank. SoFi's bank charter reshapes both the strategic fit and the approval path for each of these candidates. So we'll start out with PayPal. $56 a share. It recently shot up, but outside of this recent run-up that happened a couple days ago, the stock has not performed particularly well over the last several years, to be honest. Market cap right around $40 billion. The PE ratio getting no respect at all at 8.69. PayPal needs a growth story, straight up. They need to rewrite the narrative if they want to get investors excited about this company. Q1 2026 revenue, $8.353 billion, grew just 7%. So they're not growing a lot. CEO Enrique Lores has guided for year 2026 non-GAAP EPS flat to slightly lower versus forward year 2025's $5.31. A SoFi bolt-on would had Venmo, a bank, and a lending engine. It would really turn PayPal essentially into what SoFi wants to become at some point down the road. But the market cap, $41 billion and just $13 billion in cash. The math forces heavy leverage or dilution. They're going to have to dilute the shareholders. That's going to send the stock going down farther and farther. Becoming a bank holding company under the Fed would compound that challenge. So they're already trading at bank levels when they're not even a bank, but they're not growing enough to be in that fintech multiple. So I don't think PayPal has the ability to buy a company like SoFi. I just don't think it's possible. I just don't see it happening there with PayPal. Next up on the list, guys, we have JP Morgan. It's capacity without room. Okay, so what this actually means is JP Morgan and Bank of America both approach the 10% nationwide deposit cap, creating a regulatory wall that effectively blocks them from acquiring SoFi. So you can only have 10% of the nationwide deposits. So they don't need to go over 10%, so there's no monopoly there. So that kind of takes JP Morgan out of this running, in my opinion. $341 a share, market cap closing in on close to $1 trillion, $922 billion market cap. This company is astronomically huge. PE ratio at 15, almost trading at double what PayPal is, which is absolutely crazy. JP Morgan has the money to do it. Q2 2026 revenue reached a better than expected $57.35 billion, crazy numbers, and the board authorized a new $50 billion share repurchase program. So if you're a shareholder of JP Morgan, there could be some upside in the near future. SoFi would supercharge its digital native reach, because right now JP Morgan is kind of in that legacy bank category, right? Not a lot of younger people banking with JP Morgan Chase, in my opinion. Yet JP Morgan already brushes against the 10% nationwide deposit cap. Adding SoFi's deposits would trigger intense Fed and OCC scrutiny that likely would block the deal outright. So could they rewrite some regulation to potentially acquire SoFi? Probably, but that's going to take a lot of money to be able to do that. Next is Bank of America, $61.26 per share. We've seen quite the run up over the last year for this company. So Bank of America trading pretty high for what this company was doing growth-wise over the last several years. Trading again in the 14 to 15 PE ratio range, about $423 billion market cap. So for Bank of America, EPS $1.21 in Q2 2026, 60 million active digital banking users. So I don't think it's that crazy that SoFi will catch them sooner rather than later. We're closing in on 15 million active users on SoFi's platform. I'm expecting that number to be over 20 million, maybe by the end of the year or maybe towards the middle of next year, depending on the growth trajectory. Remember, the Super Bowl is at SoFi Stadium this year. There's going to be SoFi plastered in front of millions and millions of people for the Super Bowl coming up in February of next year. So I think we're going to see a huge run. The Rams are going to be really good this year. So are the Chargers. So SoFi is going to be plastered nationwide all the time this year. I'm really excited about that. But this regulatory 10% deposit cap is really going to hold back bigger companies like Bank of America and JP Morgan. The company that makes the most sense to me is Mastercard. They could definitely use a SoFi infrastructure to just completely take over that sector. Okay, $475 billion market cap, a bigger market cap than Bank of America, which is wild. So PE ratio a little rich at 31.15. So for Mastercard, they have the ability to do this, in my opinion. So, and if we take a look at the free cash flow, some of the better, more consistent numbers, right? 10 billion, 10 billion, 13 billion, 16 billion. We're seeing some growth there. A little stagnation back in 22, 2023, but after that, we've seen considerable growth from Mastercard. So if there was a company to acquire SoFi, it's Mastercard. They already have a partnership in place with the credit card system, so they're already on the same level with that business relationship, right? It's definitely, in my opinion, could potentially be a partner for this acquisition if Anthony Noto, in fact, would want to eventually sell the company. But Anthony Noto has been buying shares, so that makes me a little bit weary of this acquisition. But we'll see what's up. CEO Anthony Noto has described an important partnership with Mastercard to enable SoFi USD settlement across their global payment networks. Michael Maybach has signaled the direction, telling investors Mastercard is expanding our stablecoin solutions through the planned acquisition of BVNK. With about $8 billion in cash, 60% operating margins, and close to $12 billion in buyback authorization, capacity is ample. They have the money to do it. It all depends on, is SoFi for sale? The real hurdle is owning a chartered bank through the Galileo platform, and SoFi USD infrastructure makes the strategic prize unusually rich. So for me, if any of these four companies were to acquire SoFi, it's going to be Mastercard. I don't think any big bank is going to be able to do it. Capital One, I don't know if they would be in the mix. Citigroup, I'm not really sure. I don't think so. But private equity would rank between PayPal and JP Morgan in terms of strategic fit. Sponsors have the cash, but Bank Holding Companies Act rules cap non-controlling stakes and effectively bar a full buyout. Noto's aggressive May and June share purchases at up to $18 per share suggest that management is not shopping the company. Investors should watch SoFi's forward year 2026 guidance of $4.655 billion in revenue and 60 cents adjusted EPS as the real driver of takeout math. So, in my opinion, do I think SoFi is for sale? I think every company is for sale, if I'm going to be completely honest. But I don't think quite yet. I think Anthony Noto has been quoted on recent podcasts saying this could be a $1 trillion company. Would you want to sell a company that could potentially be a $1 trillion company? The answer is absolutely not. If he thinks that this type of growth is possible, then you don't sell the company. So, in my opinion, I don't think SoFi is for sale. Let me know your thoughts in the comments down below. And if you want to see more SoFi and stock market videos like this, make sure you hit the like button and subscribe to the channel. And we'll catch you guys on the next video. Peace.